Imagine waking up tomorrow and realizing the world around you has already changed the way people work, the way money moves, the way technology decides what thrives and what disappears. This story before Blockbuster vanished, while Netflix grew. Taxi drivers lost ground to Uber. Big banks lost trust, while digital wallets took over. The question is not whether change is coming. Question is whether you're on the right side of it, on the passive path. We believe that being passive doesn't mean ignoring change. It means preparing yourself so that your money works even when you're asleep. It means aligning your investments with the forces shaping the future instead of clinging to the past. Technology is no longer a background story. It is the story. Artificial intelligence is reshaping industries faster than anything before. Healthcare breakthroughs are turning once incurable diseases into treatable conditions. Bitcoin and digital assets are challenging the very definition of money. And companies like Tesla are rewriting how we move, travel, and even work. If you've ever felt unsure about investing because you don't have millions to spare, this is your moment. Because disruption doesn't wait for the wealthy to catch up. It rewards those who act early with clarity and conviction. So let's break it down. How do you prepare for a future that's being rewritten in real time? How do you avoid being left behind while others create generational wealth? And how can you take small, consistent steps that compound into life-changing results? That's what this journey is about, and by the end of it, you'll see that building wealth in an age of disruption isn't about luck, it's about direction, it's about mindset, and it's about courage to move before everyone else. Stay with me, because the first stop on this journey is mobility, not just cars, but the future of how humans move across the world, and it starts with one name you already know. Elon Musk is not just building cars, he is building the foundation of a new economy. Tesla started as an electric car company, but its vision extends far beyond vehicles. At the center is autonomous, driving cars that don't just move you, cars that can move themselves. Imagine owning a Tesla that earns money while you sleep. During the day, it drives passengers around as a robo-taxi. At night, it comes back to your driveway, ready for you again. That is not science fiction. It is a business model that could generate recurring income for millions of car owners. Transportation is one of the largest employers in the world, from taxi drivers to delivery trucks. When self-driving technology scales, the cost of moving people and goods will collapse. Today, an Uber might cost $2 to $4 per mile. In the future, that cost could drop to 25 cents. When something gets cheaper, demand explodes. That means more trips, more deliveries, and more opportunities built on top of this platform. And Tesla is not stopping there. The company is also pushing into humanoid robots, machines that can work in factories, warehouses, and maybe even homes. These robots combine artificial intelligence, robotics, and battery technology, the same convergence powering electric cars and robotaxis. Elon believes robots will become an industry even bigger than cars, and if that happens, the companies that master this first will shape the labor market of the future. This raises a question you cannot ignore: what happens to human jobs when machines drive, deliver, and even perform physical labor? History shows that every wave of technology creates new industries, even as old ones decline. The same will happen here. Jobs will not vanish, they will evolve, and the people who adapt fastest will gain the most. For investors, the lesson is clear: look for companies that create disruption, not just survive it. Tesla is a prime example. But so are the smaller firms building electric air taxis, autonomous drones, and smart logistics platforms. They are shaping a new mobility ecosystem worth trillions of dollars. Mobility is just one area being transformed. The next wave is even more personal. It's about health, survival, and the possibility of curing diseases once thought impossible. Healthcare is on the edge of a revolution. Artificial intelligence is no longer just for tech companies. It is entering hospitals, labs, and clinics. The power lies in early detection. AI can now help diagnose cancer at stage 1 with a simple blood test. Finding cancer that early means survival rates rise dramatically. Lives that would have been lost can now be saved. This is possible because 3 powerful technologies are converging: DNA sequencing, gene editing with CRISPR, and artificial intelligence guiding the entire process. Companies are already developing therapies that cure diseases like sickle cell anemia with a single treatment. Patients who once needed constant blood transfusions can now live normal lives. This is not theory. It is happening right now. The financial opportunity is as massive as the medical one. Healthcare is one of the largest industries in the world. When breakthroughs like this scale, they create entirely new markets. Investors who understand this early are positioning themselves for exponential growth. Think about the cost of traditional healthcare, expensive treatments, long hospital stays, inefficient systems that keep costs high. Now imagine a future where AI helps design treatments faster, where diseases are cured instead of managed, where medical errors decline because machines assist doctors with precision. This future will not only change how long people live, it will change where money flows. The companies creating cures will replace the companies only treating symptoms. For the everyday investor, this means opportunity. Biotech and AI-driven healthcare are no longer niche ideas. They are becoming the backbone of a new medical economy. Owning even a small piece of this future through stocks or ETFs can be life-changing over time. Healthcare is being rebuilt from the ground up, but disruption does not stop at medicine. The same forces are transforming money itself. And that shift is already underway with Bitcoin and digital assets. Money is changing faster than most people realize. For centuries, gold was the foundation of trust in currency. Then paper money, tied to government policy, took over. Now digital assets are challenging. That system, Bitcoin, was once dismissed as a fad, but early investors saw its potential as a new form of money, a system that cannot be controlled by one government, a system built on transparency and mathematics. Today there are almost 20 million Bitcoin in circulation, and the total supply will never exceed 21 million. That scarcity is what gives Bitcoin its strength. It is digital gold for a generation that lives online. Young investors are far more comfortable owning Bitcoin than bars of gold. Institutions are beginning to follow with the approval of Bitcoin ETFs. Big money is finally stepping in. When trillions of dollars begin flowing into a limited supply asset, prices move in only one direction over time. Bitcoin is not just an investment. It is also an escape for people living in unstable economies. In countries with inflation and corrupt policy, Bitcoin and stablecoins offer a lifeline. Families can protect their savings and send money across borders without middlemen. But Bitcoin is not alone. Ethereum, Solana, and other networks are building the financial internet. They enable smart contracts, decentralized applications, and new ways to store value. This is not speculation. It is the early stage of a new financial system. For the average investor, the smartest approach is steady accumulation. Small amounts invested regularly, ignoring the daily volatility. Over time, those small steps can build real wealth. The shift to digital assets is not optional. It is already happening. The question is whether you are prepared to benefit from it or be left behind. But disruption is not only in technology and money, it is also in the way we choose investments themselves. And that requires a mindset shift that separates winners from those who fall behind. Wealth is built by being on the right side of change, not by chasing what already peaked. Many investors stick to companies that feel safe. They buy big names like Apple because of history, not future potential. But history does not create wealth. Future growth does. Disruptive companies follow a different path. They ride cost curves that make technology cheaper and more powerful each year. Electric cars, genetic therapies, artificial intelligence. These are not side projects. They are platforms that will reshape every industry. This is why funds like ARKK group companies by conviction, not by size. It is about spotting opportunities before they become obvious. For small investors, this can feel intimidating, but the method is simple. Invest regularly in companies or funds focused on disruptive growth. Hold through volatility, and let time do the compounding. Dollar cost averaging is the key. Buying small amounts every month smooths out the ups and downs. It removes emotion from investing. It makes wealth building possible even if you only start with a few $100s. Consider this. If you had bought Bitcoin with $50 a month since 2015, you would have turned a small habit into a life-changing amount today. The same principle applies to stocks tied to innovation. Tesla, CRISPR, Coinbase, Roblox. These are not just tickers, they are companies building the future economy. Passive Path is about making your money work while you live your life. You don't need to trade every day, you don't need to predict the market, you need to align with disruption and let it play out. Mindset is simple. Don't invest where growth has stopped, invest where new industries are being born. Because in 5 to 10 years, those industries will define wealth, but growth does not exist in a vacuum. It is shaped by the bigger forces of government policy, debt, and inflation. And those forces will decide how much of your wealth you actually get to keep. Every investment exists inside a larger system. And that system is shaped by government policy and economic cycles. The United States carries record levels of debt. trillions of dollars owed and still growing. When governments spend beyond their means, they only have three options: raise taxes, borrow more, or print money. Each path impacts you directly. Taxes reduce what you keep. Borrowing pushes the problem into the future. Printing money creates inflation that erodes your savings. Inflation is the hidden tax that punishes the middle class most. Groceries cost more, rent rises. The value of your paycheck falls if your money does not grow faster than inflation. You are moving backward. Trade policies add another layer. Tariffs on imports might protect one industry, but raise costs for everyone. Else global trade wars can shake markets overnight, and investors who only react often lose. This is why long-term positioning matters. If your portfolio leans on disruption, you are betting on companies that can grow faster than these headwinds. Tesla scaling, autonomous driving, biotech firms curing diseases, digital assets becoming new stores of value. These forces can outpace inflation and policy mistakes, but wealth building is not only about numbers, it is also about how you navigate your own career and choices. And the lesson from those who built wealth before us reveals strategies that anyone can apply. Building wealth is not only about choosing the right investments, it is also about how you build your career and confidence along the way. One lesson stands out: make your boss look brilliant. Mindset creates opportunities no matter what industry you work in. When you solve problems your boss cannot, when you deliver results that make leadership look good, doors open faster than you. Expect confidence matters as much as skill. Walking into a room knowing more about your field than most people gives you leverage. That confidence compounds when paired with preparation and persistence. Mentors can change your trajectory. The right guidance can accelerate your growth by years. Sometimes it is a teacher who believes in you, sometimes it is a manager who takes a chance. Lesson is simple: seek out people who stretch your thinking and challenge you to do more. Wealth is not built in isolation. It grows through networks, relationships, and trust. Even one strong connection can lead to a career break that changes your financial future. The takeaway is clear. Money follows value, and value is created when you combine skill, confidence, and relationships. But even with skills and mentors, wealth only grows when you act. That means turning income into investments and aligning those investments with the future, not the past. So what are the actionable steps you can take today to get on the right side of change and secure your financial path? Start small, but start now. Wealth is built by consistent action, not waiting for the perfect moment. Set aside a fixed amount each month for investing, even $100 invested regularly. Compounds over time. Automate it so you never skip a month. Focus on areas driving future growth: artificial intelligence, electric mobility, digital assets, healthcare breakthroughs. These are not passing trends. They are building blocks of the next economy. Use dollar cost averaging to reduce risk. Buying at different prices over time smooths out the ups and downs. It keeps emotion out of your decisions. It makes investing a habit instead of a gamble. Diversify across a few strong positions. Holding one stock is risky. Owning a basket of disruptive companies or an ETF focused on innovation spreads that risk while keeping growth potential high. Think long-term, do not chase quick wins. The biggest rewards come from holding through cycles and letting exponential growth play out. Keep learning, read company reports. Listen to earnings calls, follow how technology is evolving. The more you understand, the more conviction you will have when markets get rough. And finally, invest in yourself alongside your money. Build skills that are aligned with where the world is moving. Technology, data, communication, creativity, these skills will be valuable no matter how fast industries change. The passive path is about building wealth that works quietly in the background. Let your money compound, let your skills grow, and let time do the heavy lifting. Stay disciplined, stay patient, and stay on the right side of change, like this video. Subscribe to The Passive Path, comment with the step you will take today, and share this message with someone who wants to build a better financial future. The future belongs to those who prepare for it now. Your path is waiting. Take the first step today. Before we part, I wish you success as you take action on your path. Feel free to explore more videos on this channel for deeper insights, and I shall see you in the next one.